I am known throughout DC and the DMV as the Christian Reverse Mortgage Answer Man. You might have heard my radio show. I'm affiliated with Radio One Family with Kathy Hughes, so I'm on Praise, I'm on Spirit. My radio show used to be on Spirit, but now it's on WOL 1450 AM Talk, and 95.9 FM is also WOL, also if you have those FM AMs. I'm on every Wednesday at 10 o'clock discussing the truth, the do's and the don'ts about the federally insured reverse mortgage. Our mother has a reverse, and that's how I got into this. The reverse mortgage can be a very good thing, but it also can be a very bad thing, okay? The way it becomes a bad thing from what we hear from all the different surveys we do about it is we get tons of phone calls from people and they say, I hate the reverse mortgage. And the reason they hate it, the ones that have it, who then tell other people that don't have it it's a bad thing, is because of misinformation. Is because of lack of proper, truthful, honest information about the program. It's because someone was hiding something they didn't want that homeowner to know because they wanted to take that choice away from the homeowner. And it all comes down to one thing. If I can get it out of my pocket, it's not about car keys. It's about this. It's what it all comes down to. This is the root of all evil. No. The lust. There you go. The lust of that is the root of all evil. Okay? So, what a reverse mortgage is, that's the first thing that's always been misexplained to people. Has anybody ever heard, hey, with a reverse mortgage, can everybody pretty much see, or at least you've got the slide in front of you? Has anybody ever heard, hey, in a reverse mortgage, you don't make a monthly payment? Anybody ever heard that? That's what they thought the reverse? That's wrong. Totally wrong. The reverse mortgage is simply a regular mortgage where you, the homeowner, get to control the payments that are made on it. Whether you make a $1 payment a month, a $500 payment a month, a $1,000 payment, you have that full control now. You decide how much and how often you're going to be making that payment. So many people we talk to, they go, my God, my balance is $200,000, $300,000, $400,000. I would have never done this. And I go, well, have you made any payments? What do you mean I can make a payment? Nobody ever told that. That's right. Why has nobody been told that? Because the bank doesn't want you to know. Because the bank is guaranteed, which we're going to talk about in the definition of the contract of the reverse, the bank is guaranteed to be paid no matter what money. Not your home. They don't care about your home. They care about money. So the higher your balance goes, meaning if you don't know you can make a payment and you don't know you can reduce that balance and treat it like a regular mortgage, that's more guaranteed money for the bank. So you better believe the bank is not going to tell you about it. Why didn't your loan officer tell somebody about that? Because they didn't care. All they cared about was, boom, this, in and out. Why do I really care about the person? Well, because, look, I'm not here to convert you to Christ, but I'm here to tell you one thing. He's my Lord and Savior, and He defines what I do, and the actions I do are based on His principles and His teaching. And that's all I'm saying on that. That's the difference between me and a lot of other people. Is because if He controls everything, my whole well-being, health-wise, finance-wise, everything, if I surrender it all, I'm not a hypocrite though. I fall, okay? I take it away from the Lord many times instead of Him just controlling it and letting Him do what He does best. So I don't want to stand up here making it like I'm a hypocrite. But I try to surrender everything each day and thank God we're blessed with mercy and grace every single day. Amen. You got it. Amen. So, if He has all that control, then I don't need to be like a greedy bank and make all so much money. Okay? It's more about what's best for the homeowner. But unfortunately, loan officers and banks don't treat it that way. So the first thing they will not tell you is that in a reverse mortgage, you have control now. That control is priceless. It's priceless because when it comes to retirement, things come up in your life. And when these life emergencies come up, like the loss of a spouse, we love our spouse, but I'm going to tell you, they're not always going to be here. They're not. We always plan like they're going to be here. We always budget like they're going to be here. And when they depart and the Lord takes them home, are we financially prepared for that also loss of income that might also be incurred? That's the worst phone call I get all the time from a widow, the husband or the wife that says, hey, I just lost my spouse. We were doing great with our mortgage and everything, but I just lost $1,100 from that pension. If you don't look into those facts now while you're still married and budget accordingly, if that money drops off, what are you going to do? You're going to have no time to grieve. No time to grieve because financially you're going to be into a nightmare. And the bank's not going to care. The bank's not going to say, okay, no, we understand. Take a year off. Take a couple of years off. No. They want money. They can care less. They'll send you a little condolence letter, but that's about it. So with the reverse, you have control over those aspects. Now, I'm not saying to do the reverse. Just explaining what it can do for you. It can give you that control, that peace of mind, that stress-free, worry-free existence as far as your finances. Not talking about your children in the after, but we will discuss that. Your finances. If times are tough, if you need a new roof, if you were making payments on your reverse, you can stop for a couple months. Think of it like this. In a regular mortgage, if you're making $1,000 a month payments every single month, after 12 months, you will have paid $12,000 down towards your mortgage. But you can't get that money back. Once you gave it to the bank, it is gone. There's nothing you can do about it. In the reverse mortgage, you pay that same $12,000 towards that balance. It goes exactly, you got principal and interest, goes exactly like that. But you also have what's called matching payments by the bank in a reverse mortgage. The bank matches any payment you make towards your reverse mortgage. They don't match it towards that balance, but they give it back to you. So if you make a $1,000 payment, thousands applied towards that balance, but $1,000 is also gifted back to you by the bank and put in what's called a line of credit savings account. And that line of credit savings account is collecting interest at over 4% in your favor. Why would the bank do that, though? They're giving you control over making payments, of when you make the payments, if at all, because you could decide zero, and how often you make them. Why are they now going to then match whatever you pay? Because they didn't want you making a payment. When you made a payment, you took away money from them that they were guaranteed to get plus interest when the Lord calls you home, or if you decided to sell your house. So they want that money back. So what they do is they entice you. When you make a payment, they apply it, and then they also give it back to you in this line of credit, and they let it grow. Because they believe that one day you are going to use that money. And if you do then use that money, which is tax-free, by the way, 100% tax-free, all proceeds from the reverse payments that are made, the line of credit, all tax-free. They believe you're going to use it, and when you use it, it then goes over to the column of what the balance is. And that's what the bank wants, that balance to rise. So if you're going to beat them at their game and pay down that mortgage, they're also going to credit those payments, not only to that balance, but also to your line of credit, because they believe you're going to use it. And it's going to grow, and it's going to grow, and it's going to grow. Imagine 12 months of not making a payment. 12 months of making a payment of $1,000. In a regular mortgage, what do you have to show for yourself at the end of 1 year? You put $12,000 towards the balance. That's cool. But then your roof goes. Your transmission goes. Something happens, and it's going to happen in life. Are you going to be prepared for a successful retirement? The reverse scenario is you made that $12,000 in payments for the year. Not only do you have that balance knocked down like the regular mortgage, you also have over here this line of credit, this safety net. This line of credit that's a savings account collecting interest for you. Your roof goes, great. Not great, sad, but great that I've prepared myself to have an emergency fund here. Because not everybody's got $12,000 saved up in their savings accounts. Most of my clients have our mom, Social Security, $900-something a month. I got clients only getting $500, $600 a month for Social Security. How can you survive off of that without preparing for an emergency? It's impossible. And if you don't have children that are taking care of all those other bills, like I take care of every single bill for my mom, but she handles all the phone calls for mom. So it weighs out. If you don't have that, what are you going to do? The reverse might be the tool needed to successfully prepare yourself for retirement. But my goal is this. Prove to me you can still do it. Prove to me the status quo. Prove to me you can still make payments on your mortgage. Because so many people who are at least 62 years old are still paying a mortgage. And some of them have just refinanced, so that means they're going to be paying it until they're, Lord willing, 92 years old. And if you don't think in those 30 years some crisis that's going to have a dollar sign hooked onto it is going to occur, you're in for a big surprise. Because when it does occur, that's when stress just comes in and it tears you apart. So at 72, 82, that kind of stress, it's going to take years off your life. If you believe in Christ, well, you're going to see Him a lot sooner than a lot of other people because you're going to be going home a lot sooner too, okay? So that preparation gives you that success. 5 years of making those payments through a reverse. The worst phone call I get is the spouse that says, my husband died 5 years ago. I've been making payments, I've been robbing Peter to pay Paul, but I went through my savings. I just can't do it anymore. And now I'm in jeopardy. I'm a couple months behind on my mortgage. But if they would have applied 5 years previously doing the reverse, still making those payments for those 5 years at $1,000 a month or whatever it is, but we'll just round it to $1,000, they would have paid down their mortgage $12,000 after 1 year, $24,000 2 years, 5 years, $60,000 towards the balance, which means they're leaving more equity in the home for their children, or if they want to sell the house and downsize, but they've also got sitting over here $60,000 in a line of credit savings account, which is not $60,000 because it's been collecting interest. It is now like $75,000 tax-free. If they need that money to enjoy the rest of life, because if you're a believer in Christ, we're going to enjoy it up there. And when you're down here, you can't take that money with you. And you can't take that home with you. And too many people who are at least 62 years old die every day and leave all this equity in their house, and they struggle through retirement. They robbed Peter to pay Paul. And it was a struggle each day, and it didn't have to be. But some people don't like the reverse because they say, well, wait a sec, I want to leave something to my children. Okay, and I understand that. You're going to be able to possibly, not going to stand here and lie, you're possibly going to be able to leave something to your children if you live in Beverly Hills, which is Washington, D.C. of the East Coast. But you know once you cross over Eastern or Southern, you're not in Beverly Hills anymore. I'm from Los Angeles, so I know the difference between Beverly Hills and Compton because I went to school in Compton, okay? I went to USC. And the home values are different. Big difference. Once you cross that street, it's a huge difference. So you do live in Beverly Hills. So there is going to be some equity in there. But the reverse mortgage is not for your children. It's for you. Okay? But if you want to leave them that legacy, then you better make payments to get that balance down. If you have a regular mortgage, what happens if the Lord called you home? That balance is still there. Kids have got to pay that. If they don't pay it, they're going to lose the home. With the reverse, the only difference is that amount that's left over, they have to physically go to a bank and refinance that amount and qualify to refinance that amount. So if you're not making payments and that balance goes to $300,000, $400,000, even if your children are making $100,000 a year, who's going to want to even undertake that? They're going to say, forget about it, we'll just sell the house. And a lot of people wind up selling the house anyways. Yes?
I have a question. Say if you refinance your home, can you still do a reverse mortgage?
Absolutely. Why? Because you live in Beverly Hills. Okay? But if you refinance and took a lot of cash out, then maybe you can't. How you qualify is based on your age, what the house would appraise for, and how much you owe. But don't do, well, and now the credited income does play a factor. It's not like a regular mortgage, but they want to make sure that you've been paying your taxes on time. Because if you haven't, you're in jeopardy of foreclosing. You know how many people don't pay their taxes that are in a reverse already? Over 20%. That's a lot. And what happens if you don't pay your taxes? You're out there on the curb and the newscaster's putting the microphone in your face saying, what happened? And they say, I did that stinking reverse and I lost my home. Yeah. No, I did the reverse. I didn't pay my taxes and I lost my home. So yes, you can refinance the next day and get into a reverse.
Okay, say if you didn't borrow anything, you refinance, you just basically
you got a really good shot.
You refinanced and made it less years than what the years you previously had.
And maybe lower the interest rate or lower the payment. Then you got a much better shot of qualifying to get in the reverse. But it is all based on that age. If you're 62, you're a brand new baby. Okay? And according to the reverse, they're not going to let you borrow as much equity. And that gets us into the contract, which we'll talk about percentages. The reverse mortgage is a contract.
So what age you supposed to be? You said 62. So
on your last,
say you passed 60.
on your second to last sheet on there, you're going to see a chart. And I should have mentioned that, I'm sorry. The second to last sheet in that packet is a chart that tells you how much equity you qualify for based on your age. And if it says it's 62, you qualify for 52%. That means 52% of an appraised value is what you qualify for. So if your house appraises for $400,000, you qualify for 52.4% of that $400,000. But whatever that figure is, let's say it winds up being $210,000. If that's not enough to pay off an existing mortgage on the property, you don't qualify. And that's how it was for me and my mom, because Heather wasn't out here at this time. No, you were out here, 2007.
Yes.
Yeah,
Yes.
Heather was there. But I was the one paying for it. So my mom was short by $12,000, so I had to come to the table with $12,000 to get my mom a reverse. Why would anybody do that? Well, my payment was $2,200 a month. We had 29 years left on our mortgage, so I went to my three best friends, Citibank, Chase, and Discover, and that's where I got the 12 grand. Because think about it. After 5 months of not paying $2,200 a month, I almost got my 12 grand back, like 5.5 months. I got that money back, and the rest has been gravy for the last 7 years of not making that payment. But we were not told that you could make a payment. So if I wanted to keep that house, the choice was taken away from me. Unfortunately, in the reverse, it's all about choice. The bank chooses not to tell you things. Your loan officer chooses not to tell you stuff on purpose because they benefit financially if they don't tell you the truth. But that's what my show is about, exposing the hidden truths. Not that it can be bad, but if it's not explained properly, and if the loan officer doesn't dig deep into your current situation, dig deep into what you want to do with the house afterwards, why you're even thinking about doing the reverse. If they don't explore every avenue, they've done you a disservice because they thought about the dollar instead of the fellow brother and sister in Christ. Even if you don't believe in Christ, we're all human beings. Okay? So you have to treat each other accordingly. Oh, thanks, yeah. Just tell me that my voice is getting off. So, the reverse is a contract, okay? And it's at point number 4 on page 3. The reverse, when people say you don't make a payment, and people used to go, well, wait a second, if I'm not making a payment on something, I don't own this house anymore. And that's what I believe, too, about the reverse until I dug deep into it, okay? Why do they say don't make a payment or you're not required to make a payment? Even though I'm telling you the opposite, it's you control the payment. If you control a $0 payment, you still got control. If you control making a $1,000 payment, you still got control. You're not under the bank's, lord and tenant rule of doing what they say or hit the highway, and literally that's what happens. I'm under the bank's rule right now. If I don't follow their terms, I lose my home. If you're 62 and you have a reverse, you control those terms if it's been properly explained to you like that. If it wasn't and you didn't make payments and you wanted to leave something to your children and your balance has gone sky high, you got taken in the sense to where the choice was taken away from you for making it like that. But why are you given control? All because of the contract, point number 4. A reverse mortgage is different from any other mortgage because it's a contract between 3 people. It's the federal government, the bank, and the homeowner. The federal government says to the bank, hey, we want you to acknowledge this homeowner has equity. And I'm not talking about just equity. I'm talking about your blood, sweat, and tears, hard-earned equity you've already paid in to the home. You're not buying a house for the first time. When you're purchasing a house for the first time, you're going to the bank saying, I got no money in this home. I need your money so I can stay in this home. With the reverse, the bank is just acknowledging you have equity in your home. They're transforming that equity into tax-free cash to either pay off an existing mortgage, if you do have one. All you got to do is own your house, not rent it. If you own your house, you have a mortgage, you can qualify if you meet the age requirements and all that. If you don't have a mortgage, then you definitely have a great shot at qualifying unless your credit or income is so, I didn't mean to point to you, but you had mentioned the credit income. It's not unless your credit or your income is not on the basis of what it should be. Okay, and we can explain that if I have time. So this contract is set up. The government tells the bank, acknowledge the homeowner has this equity. Give them their equity. Transform it into tax-free cash. And the bank goes, what? And then the government says, yeah, and let them control whatever payments they want to make, if they even want to make a payment at all, or how often they do. And the bank goes, no way! Why are we, when we're always in control, why are we going to give that control to somebody else? What are you going to do for us, federal government? Federal government goes, okay, here's what we'll do. You'll charge interest on there like a regular mortgage. Bank goes, okay, sound a little bit better, but we're still not making money. Federal government goes, okay, we're going to guarantee you, bank, that if you let the homeowner utilize their equity, their hard-earned blood, sweat, and tears, and let them control the method of payment back if they decide to make one, we're going to guarantee you that money plus all that interest no matter what. No matter what, if the market falls, if the home value is $200,000 but the loan amount's $500,000, the bank is guaranteed by the federal government $500,000. Bank says, hallelujah, sign me up. That's why the bank wants a reverse mortgage for everybody. Why? Because it's a cash cow. It's a 401k for them. It's guaranteed money. They don't want the home. They want the money. And if you're going to guarantee them that money, they're going to say, line up, everybody, as long as you meet the terms, the age limits on that second to last page and the qualifications, and as long as your credit in the last 2 years is good, not the score, but you don't have 30-day, 60-day late stuff like that, as long as your taxes and homeowners insurance has been paid on time. And I don't mean that date that DC gives you, if you pay by September, if you pay by October, if you pay by November. No, September. That's on time, because if you pay in October and November, there's a late fee on there, okay? Even though it's not late like you're in jeopardy of losing your home, but that's a late fee. That scares the lender. That scares the government, because over 20% default on the reverse because they don't even pay the taxes. So what the government would then do is say, hey, you're scaring us. So what we're going to do is, we're not going to disqualify you, but we're going to take some of your proceeds from the reverse, if there are some, enough, and we're going to pay the taxes and insurance for you, good through like 88 or 89 years old. So this way they know no matter what, like on a regular mortgage, it's escrowed in, so they don't have to worry. The bank's like, this is great. Everybody come down, no problem. Let's do a reverse, perfect, because we're guaranteed payment. And that's why the reverse always sounds too good to be true, because of that catch. And that catch is the federal government. It's a non-recourse loan. Because of that government insurance, the homeowner's not responsible for one dime, and the children are not, except if the children want to keep that house. If Jimmy, who's living in the basement, wants to keep that home, then that balance better be low enough for Jimmy to refinance it. And if Jimmy's not working, then Jimmy's going to have to sell the house or get out of Dodge. But I'll tell you what, 90% of the time, what do the kids do when the parent passes on? They sell the house. They sell it, okay? Even if you're saying, I want to leave that legacy and I want them staying in that house that my grandfather built, when you go up there, you're down there, okay? There's no clearance from It's a Wonderful Life going to come up. Well, no, there is, but you know what I'm saying. So that's how that works there. So let me go to page 10. That's that contract. That contract is so important. That insurance is so important because what it does is it guarantees you that no matter what happens, you're never responsible. Now we're on page 10, okay? Page 10, this is the most important thing. What the bank was just putting a circle on my foot and showing it. What banks and mortgage brokers don't want you to know about the reverse mortgage. Because if you found out the truth, if you knew you could make payments, what are you doing to the bank? You're taking away guaranteed money. So they don't want to let go. That's why banks not going to advertise that. Loan officer doesn't care enough about you to dig deep into your situation to find that information out. What are some of the other things that are really important? Closing costs. The closing costs are in any mortgage, but in the reverse, they're higher. Why are they higher? Because of the government protection. One of the closing costs is called FHA mortgage insurance, okay? And it protects the homeowner no matter what. But it's a very expensive closing cost. But guess what? All the closing costs involved, from the origination fee, the title fees, the appraisal fee, whatever fees whatsoever, I tell you a secret. They're optional. They're optional. They have to be paid, their true cost, but they're optional in the sense of who pays them. Did you know that I can pay some of these or all of them for you? No, because if I tell you that, what am I doing? I'm throwing this out the door and I'm putting Christ at the center. And not everybody does that. Again, I'm not perfect, okay? But I'm trying to do and live the way the Lord's asking me to. But that takes a lot. That's an ethical decision to put that wallet on the side and say, hey, your closing costs are $18,000. Bless you. Your closing costs are $18,000. I can knock them down to $5,000. How can I just knock them down to $5,000 when they're real costs? Somebody has to pay them because they're true. So what did I just tell you then? If I made it from 18 down to 5, that's a difference of $13,000, which means I must be getting paid at least $13,000 to do one reverse. Try before the election results, and I'm not going to get political on you, but before he got in there, I was getting paid $40,000, $50,000 sometimes on one reverse. I don't know about you, that's a whole lot of money. Okay? Do I need $40,000 or $50,000? No. Would I like it? Yes. But if my faith is in him, then he's got me. Okay? But if you don't know how much I'm getting paid, you don't then know that I can take some of that money legally as a broker credit and give it back to you to lessen that burden. Because when people say, well, don't worry about the closing costs, we just finance them in. You better worry because it's coming out of your equity. You might not be paying up front, but they're taking it from your equity. And if they can give back to lessen that taken, wouldn't that be nice? But you don't know because nobody's ever told you. That's why I don't care who you do a reverse with or if you ever do it all. You don't ever have to go through me. I'm not taking anybody's name or number. But if I'm properly educating you and informing you on what you're entitled to and deserve as a human being to be told the truth, and as a homeowner under the terms of the reverse and what I get paid, then we should do it. Am I doing something different that nobody else can do? No. It's just, am I willing to make the choice to do that? And that's the difference. Money. When you get qualified for the reverse mortgage, all of a sudden say somebody's free and clear and they qualify for $200,000. Okay? So what happens is the loan officer says, oh great, with the reverse mortgage, after you're all finished, what we're going to do is directly deposit $200,000 into your bank account. No, that's a nightmare. That's like giving $200,000 to a kid in a candy store. Because I know if I got $200,000 in my bank account, what am I going to do? Spend, 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 spend. Take that card and just stick it right in the machine like that, and that money comes out. But did you know you didn't have to take the full $200,000? No, because nobody told you. Because that loan officer made the choice for you. Because they got paid more money if you took it out. The bank's not going to tell you, because what happens is your balance starts at $200,000, which is what they want. But if you only needed $10,000 of it, and the other $190,000 could have stayed where? In the line of credit, collecting over 4% interest in your favor. 4% interest on $190,000 after 10 years becomes like $350,000. But you don't have it because somebody made that choice for you. And they put that $200,000 in your account because they didn't have the decency to tell you the difference. They made that choice. And that's why a lot of people can't stand the reverse, because they didn't know that. They didn't get that information. It's all about the choices and who's willing to tell you the truth. Interest rates, there's adjustables and fixed rates. You might think the fix is the best thing, but it's actually the opposite. The adjustable is the best thing because it's almost half of what the fixed rate is. My mom's got a fixed rate. We didn't know better. Fixed rate's got to be the best thing, right? No. Only when you're making payments in a regular mortgage is a fixed rate the best thing. But in an adjustable, you want fluctuation, okay? Also, in a fixed rate, you ready for this? They changed the rules in 2013. If you qualify for $200,000, they now break that up because too many people were going through $200,000 like that. So they break it up into $100,000 this year. He's like, that's a crazy guy, and they're screaming. And they got $100,000 in the second year. 365 days later, they separate it. Not in the fixed rate. In the fixed rate, you only get one disbursement, and you're forced to take out that disbursement. Even if you only needed 10,000 of it, they don't care. By law, you've got to take that 100,000 out in that first year. What about your second year money of 100,000? It's not there in the fixed rate. You only get one disbursement. Bank's okay with that because they got interest double to what the adjustable is, so they're going to gain that difference. I'm okay with that as a loan officer, as a greedy one, because I'm getting paid on both amounts. You don't get both amounts, but I get paid on both amounts. In the adjustable, you have the full 200,000 at your disposal. But what I suggest doing is don't take all that money. Leave it in the line of credit. Take it out when you need it. All it is 3 to 5 business days before they send it to you. And one of the last things I'm going to leave you with is this. If you've already got a reverse mortgage, and this is so important, if you've got a reverse mortgage, you would be absolutely crazy not to refinance your reverse mortgage when you're eligible to. In a reverse mortgage, and in D.C., home values are going up. Don't have to tell you that, okay? Yes. They're going up, and when you repair your home, they really go up. And in a reverse mortgage, when your equity goes higher than what the balance, bless you, is raising, this window opens up of its cash reserve available equity through your reverse mortgage. So people are calling people on the phone all the time and saying, you got $30,000 more of your reverse mortgage equity you left on the table. You got another $40,000 this. That's cash they're throwing at people. No, I don't do that. What I tell you is, look, if you've got $40,000 available to you in your reverse mortgage, and you decide to not at least acknowledge it, meaning reserve it, not take it in the form of cash, but put a stop sign up to the bank saying, I know I got money coming to me, I don't want to use it now, but I at least want to reserve it in case for a rainy day. It goes into that line of credit, and it sits there. But what if you, because you don't know that, person calls you, say, no, don't want to do it, don't want to do it, don't want to do it. What's happening? You're hand delivering that $40,000 to the bank. Remember, the bank's eating into your equity. That's how the reverse works. Your balance goes up if you're not making a payment. And they're eating into the equity. But when that window opens up for more of that cash reserve equity, they eat into that window first. So if your balance is going up by $1,000 a month, and you've got $40,000 available to you still through your reverse that you can at least reserve, doesn't have to be in the form of cash, the bank's going to eat into that $40,000 and $1,000 a month. After 2.5, 3 years with that compound interest, there's no more 40. Where did it go? You hand-delivered it on a silver platter right to the bank. But because loan officers are calling people with a horrific, stereotypical, oh, it's a senior, they must need money, you know? They haven't seen money, they must need it. That's horrible. And don't let me even get into the discriminatory part of how they do it in D.C., because it's really disgusting, okay? But if you don't at least acknowledge that that equity is there, the bank is going to swoop in legally underneath your nose and steal it from you. So when you're on the reverse, it's a train that you're already on. You can make modifications to it. You can lower the interest rate. You can access more equity, not in the form of cash if you don't need it, but for a rainy day in the future by leaving it in a line of credit. Once you reserve it, that stops the bank, like a big stop sign, hands to the face, from taking that equity. So there's so many things people will not tell you about the reverse. We got like 10, 12, 14, 15 more slides. What I would love to do is, if you like the information I said, is to get me back here again for maybe more members or senior members or whoever, or everybody that's here, but in a nice, slow-paced, relaxing way about how it works for you. But at least hopefully I've opened up your eyes and your ears to hearing there is an alternative. There's more to the reverse than just what is told to you. That information you have in there is priceless, and letting other people know that truth is important. I do have my business cards there. I only want you calling me not to do the reverse. I will say yes if you're interested, but my goal is not to solicit you, but to make sure you're properly informed. If you do want to go through me, that's a blessing, but you're not forced to, because if I've armed you and educated you with everything you need to know, that's the blessing, because it's going to come back to me tenfold.
That's your card right here. Question.
Yep, also in there, yep.
Okay, but having never paid when you didn't know about making the payment. Can you begin to make the payments now?
You can, but what you need to now do is weigh the pros and the cons.
Okay.
Because that choice was taken away from you, and you've been in it maybe, let's say, 5 years, 6 years, would it make sense now making payments? What I'm going to want to do is sit down and say, what are your goals for the house? Do you want to leave it to children? Are they going to definitely live in that house, or are they going to sell it? Then I'm going to tell you it's better not to do that, except if you do make a payment, remember, it's like taking $1,000 and putting it into a bank account that's collecting that kind of interest. So it does make sense in the way of, hey, I want a good retirement account. I've got people purposely doing a reverse for this reason, for that line of credit account. They got a $150,000 mortgage that they do want to pay down to some extent, but they want every payment to work in their benefit, to also be attached to this 4% growth. You can't get that from a bank nowadays. You can't even get 10 times that from a bank, because Bank of America gives me 0.3. So I would be looking into that situation and seeing. It wouldn't hurt you, because in a reverse, if you've ever been in a regular mortgage, I've made payments before that I said, I wish I could get those back. And if I call Bank of America and say, can I get 600 of that back? Click, or a lot of laughter. In a reverse, you make that $1,000 payment, you can call the next day and say, give it to me back. And they'll give it right back to you. Plus that interest that accrued for one day in your favor. That's the blessing, is that control. You can't get, you are controlling your retirement in such a way. The only person it hurts is if you're trying to leave a free and clear home to somebody. But you can still accomplish that by making payments. Or get Jimmy to start making payments. If Jimmy wants to keep that house, then Jimmy needs to start contributing. But everybody's got different situations. I'm not here to judge anybody. We all have them in the family where sometimes Jimmy can't make that payment. Yes?
Common sense would tell me if you have more than one piece of property, you cannot do reverse mortgage, can you?
You can own 30 properties, 1 million properties, and do a reverse. But you can only do a reverse on your primary residence, where you live. But is there any reverse police that's ever going to knock on your door and say, hi, is Mrs. So-and-so here? No. If somebody does, you call the police, because that person shouldn't be there, because there is no reverse police. But legally, you must live there 6 months and 1 day out of the year. Do I have clients that have a vacation home in New York, or, no, sorry, not New York, South Carolina or Florida? Because I used to have clients in New York? Yes. Do I think some of them might be doing 7 months down in Florida and not the 7 months up here? Yeah. But as long as I've legally explained it, and they know there's no reverse police, they just send you a piece of paper once a year that says, I certify I live here.
One question.
Yes.
Okay, I took out the first one.
Oh, hold on one second. Heather, she's doing a raffle. I got 2 gift cards to give out for free. On your paperwork,
page 1, right
at the top right of the very first page. She's going to call, what do we have, 2 gift cards?
I got 2 gift cards to give you, $25 gift cards. So I'm going to call out a number. It's going to be on the first page. Circle wherever that number is circled. Okay, I'm going to call. You need a packet. Okay.
Yeah. Okay. Should I pour it out and put it in the line?
That's why
I need one more. Okay.
Yeah.
Should
It's
I
already in there.
Oh, it's already in there.
It's already in there somewhere.
Okay, well,
So we need to get your statement every month.
All right, let's see. Here we go.
Okay.
First number is number 20. Somebody have number 20?
Okay, 20. Oh, so my granddaughter. We got 20.
Oh, what? I don't, there's 20 people in here, so maybe somebody got number 20? 20?
Oh, okay.
No 20, right? Okay.
No 20.
Okay, we'll put
Just like that.
lucky number, here we
That's
go.
also the thing is you can sell your house whenever you want. You're not forced to stay in the reverse forever. You can get out of the
18?
house.
Right here.
All right.
And if the house sells for less than
There you go. And I got one more.
One more.
because the government guarantees the bank's full payment. So you
Yes,
can sell
all the
that
time.
house whenever you want.
Next number
The
is
balance is $300.
Ooh.
My mom's balance.
number 8.
Number 8. Right there. Okay.
All right, and number 8 in the box means
Responsible
new
for that
beginnings.
$490.
New beginnings. Number 8.
That's the one you need. The government, that's the contract they signed up for. So you don't have to stay with your parents. She wants to get out of the house.
There's an extra one.
Mary, you had a question for me, right?
Oh, I was gonna say, if we could have you back for just those who want to go through the whole program, we will do it like a little sign-in, and then we'll have to call you back for those who want us to go through the whole program.
That would be a blessing, because every little page we talk about, you know, why you would think about doing a reverse.